Hello, everyone. Welcome to Wall Street from Main Street podcast. My name is Mo Daoud, and today's special guest is David Bach. David is a 9-time New York Times best-selling author. He's an entrepreneur. He is the founder of FinishRich.com, and he's also the vice president of Edelman Financial Services. Some of the books that he authored include The Automatic Millionaire and Smart Couple Finish Rich. And that book is the number one, or was the number one, national and international bestseller, and has sold over 1 million copies. David, thank you for joining us.
Mo, it's my sincere pleasure. Thank you so much for having me on your podcast.
Okay, great, David. For some of our listeners, that may not have heard of you, do you mind talking about your background a little bit and where you came from and why you decided to help over millions and millions of people with personal finance problems?
Yeah, sure. It'd be my pleasure. It's funny. I just got done doing a speech yesterday. I was in Irvine, California, and we had 600 people. It was a Smart Couples Finish Rich seminar. And I actually shared this story from the stage, which I haven't shared in a long time, which is that I started going to investment classes at a really young age. I started going to investment classes at age 9. And when I told this story last night, the room kind of cracked up, and they go, you probably wonder, how does a 9-year-old end up in an investment class? And the answer is that my dad was teaching it. My dad was a stockbroker. Today we call them financial advisors, but my dad was a stockbroker, and my father taught investment classes. This is in Northern California, and he would take me once a week to the class that he taught, kind of as a way to spend, my way of spending time with my dad, which is kind of funny. And I would sit in the back of the room, and at the end of the night, he'd take me out to Baskin-Robbins. And what happened is, sitting in the back of the room once a week, listening to my dad teach these retirement classes, I started learning a lot. And literally by the time I was 12, I was teaching my friends' parents why they should be getting out of CDs because they were certificates of depreciation, and instead they should be investing in tax-free AAA-rated municipal bonds, and explaining what that tax-equivalent yield would look like if they did that. And my friends' parents were looking at me like, who is this 12-year-old kid at our dinner table right now? So I started the business really young. My family always talked about investing, and I came into the business in 1993. I started teaching classes originally in my career very early for women and money. My course I created was a course called Smart Women Finish Rich. And in many ways, that course sort of set me on a mission because as that course became more popular, I turned it into a book, and I did a PBS special, and I created my own mission statement, which was to teach 1 million women how to be smarter about money. And that really became my life's passion and purpose. And so I've been now doing this since 1993. It's hard for me to believe, but it's been 22 years. I've had 1 million people go through my seminars. I have 7 million books out there. And I've been on thousands of TV shows. And now today I'm the vice chairman of Edelman Financial Services, which is one of the largest financial planning companies in the country. So I just live to teach people about money, and I love to be of service in this area.
And that's interesting because a lot of parents today, they don't sit down with their kids and teach them how to manage money or personal finance or how to invest, etc. So it seems like your parents did a great job showing you how to do it, what not to do, and what to do. Because I think a lot of I've seen a lot of parents today don't sit down and talk about that with their kid. I mean, my parents never did it directly. Indirectly, they showed me what not to do.
That's right.
I've done a good job not doing what they did so far.
Well, it's interesting because if you really look at how it all started, it really started with my grandmother, because my grandmother at 30 was broke, and my grandmother Rose Bach I tell stories about her in my books, but my grandmother started with nothing, and she became a self-made millionaire. She didn't have a college education, and at 30, she decided that she wanted to someday have financial security, and she took classes, she read books, and she started investing. And she really passed the legacy of learning about money to my father, and then passed that on to my sister and myself. And she helped me buy my first stock at age 7 in McDonald's. So, by 9, I was buying stock in Disneyland or Disney. And so you're right. It comes back to really teaching this stuff at a young age. And I am just such a big believer that if we taught this stuff in school, everybody would be so much better off. In fact, I always say really nobody should need my books, because everything that I teach in a way is so fundamentally basic that in a way, really, you should know it by the time you graduate from high school. And the amazing thing is that we get out of high school and college, and we have no education about how to invest. We have no education about, what the stock market does and the bond market does and how interest rates affect our economy and how to borrow money. And so people end up in a world of hurt because they basically are financially illiterate.
Now let's talk about couples and personal finance. Now, I read that a study has shown that money is the top predictor of divorce, which is not surprising to me to find that out. So I wanted to ask you, in your interaction with a lot of couples that you help out and all the research you've done, why do couples fight about money?
So I've done a lot of research in this area, Mo. My second book was Smart Couples Finish Rich. It's probably the most popular book that's ever been done for couples and money. That book has over 1 million copies out. We've had well over 100,000 couples come through my seminars. And here's what I can tell you from our research and all that experience. Success leaves clues. I can tell you what happy couples do who have been married 20, 30, 40 years, what they've done to be successful, be wealthy and happy. And I can tell you what unhappy couples do. So let me start with the unhappy couples, because I think if you avoid what unhappy couples do, in a way, just avoiding what they do can set you on the right path. What do unhappy couples do? Unhappy couples, first of all, do not work on their finances as a team. They pay the bills separately, or if one of them pays the bills, the other one is uninvolved. They fight regularly when they pay the bills. Most couples who have financial issues, it's because they're only talking about money when they pay the bills, and therefore they're fighting about every 2 weeks over the bills. The third thing that couples do who are not doing well is they try to have a budget. And part of that's because they've just been given bad information. They've been told, well, you need a budget, and if you have a budget, you can fix your financial situation. The fact is that budgeting doesn't work, and it leads to more fights. So those are some of the big things that couples do wrong, and a lot of it has to do with how they were raised, and also people tend to marry their financial opposites. So if you're somebody who loves to spend money, you're a shopper at heart, chances are you fell in love with a budgeter or a saver at heart, and that can be a real problem because you're not financially compatible. So now if you flip that and you go, well, what do happy couples do? Number one thing, happy couples talk about money all the time. They work together as a team. If one person pays the bills, they still together once a month usually review all the finances together. They have common financial goals that they're working towards. So if you talk to couples who are in their 50s and their 60s and they're happily married and they've done well financially, they created financial goals usually at a young age, usually in the beginning of their marriage. They created a goal on how much money they're going to save. They created a goal to buy a home. If they wanted to pay the home off, they made that a goal. If they wanted to put their kids through school and save money for college, they worked on that goal together. And so much of it is that if you really continue to pull back the curtains on what these couples did, most cases they got a financial plan at a relatively young age, and they hired a financial advisor to work with them on those goals, and then they consistently revisited how are they doing, and if they got off track, they tweaked it and got back on track.
And you made an interesting point about couples. Maybe a husband has a history of, spending a lot of money or has a lot of debt from either college or car loan or whatever. Then maybe the wife is good with money, doesn't have any debt. The top popularly had to take care of finance. And when they get married, they find out that, their financial habit doesn't go in sync. And I think that's one of the big problems that couples have is that they can't get on the same page on how to manage their money and get there on the right track.
So I can tell you one of the things, there's actually a secret to getting yourself on the same page. And I'll give you two secrets because I teach both of these. So one secret is that you focus on your values, not your spending. So in Smart Couples Finish Rich and in my seminars, I teach couples how to do what I call values-based financial planning. And what that really means is that you identify your individual values. So I share with you what my top 5 values are. My wife shares back with me what her top 5 values are. And then together we create a value circle of our 5 values as a couple. It's some people, it's almost like a mission statement, only it's a value statement. And when you identify your values as a couple, you can focus in on what's really most important to you. And then you can start to look at, is the way in which we're spending money, does it line up with our values? And when couples recognize that the way they're spending money or the way they're saving money doesn't line up, where their financial behavior basically isn't congruent with their value system, that's where couples come together and often stop the fights and really work as a team to fix the things. So that's number one.
And that's an interesting point right there. And for couples out there that with different financial habits, the way to, I think it's all about communication. To me, if they communicate their expectation up front and their goals and set their goals and their objectives at the beginning of the marriage, and then long term they'll be well off.
There's no doubt, and I think that why I love teaching couples about money so much is that when you bring couples together on a topic that divides them, they become unstoppable. And I've seen couples where they're fighting about money and they're actually on the verge of divorce, and I've been able to help them really in a short period of time. When I say short, like less than an hour, completely change the direction of the conversation, which ultimately changes the direction of the marriage. I've done a bunch of shows with Oprah back in the day when she had her show, and we did a bunch of couples makeover shows. And I'll never forget going into one of the shows because this young couple, they were a great couple, but they were on the verge of divorce because they were fighting over money. And we went in and we had a meeting with them with a camera crew. And I remember the producers asking me how I was going to take them from fighting to working as a team. And I said, watch, when I take them through this value circle in less than 10 minutes, they're going to go from fighting to having their arms around each other, kissing and saying, we can do this together. And that's exactly what happened. And I'll never forget the producer turned to me and said, wow, I can't believe how well that just worked. I'm like, I know, this stuff works. It works all the time because most couples at their core, if you fell in love with somebody and you married somebody that you really love, underneath all the tension and the anxiety and the fighting over money is still that love. And if you can pull away the tension and the anxiety and the fighting, and you can focus the couple in on what's most important to them, their values, and having a purpose that's bigger than themselves. It sounds very, almost like a little bit new agey as I'm saying it, but it really, really works. And usually, what I've seen is that a lot of times couples end up in couples counseling. They don't need couples counseling. What they basically need is a financial plan. Because when you fix the finances, you can quickly fix the marriage.
And that's a great point. And I want to shift gears here. And one of your biggest beliefs is that you should pay yourself first. And that goes to whether you're a couple or you're single and you're trying to save money for buying a house or vacation or et cetera. Why do you think it's important for people to pay yourself first?
Well, so I appreciate you bringing that up, Mo, because I've taught that everywhere. Pay yourself first means when you're on a paycheck, the first person who gets paid is you. And right now when you're on a paycheck, the first person who gets paid is the government. So if you go to work at 9 o'clock, chances are just your federal tax and state tax alone, you're losing a third of your paycheck. So imagine taking $1 and ripping a third of the dollar off. That's going to taxes. And it's really important to look at, by the way, how you pay your taxes. Because if you look at how you pay your taxes, you'll know how you should pay yourself first. If you look at how you pay taxes, the government figured out that Americans can't budget. And now the government can't budget either, by the way. But they figured out that Americans can't budget. So in the 40s, they changed the tax laws so that basically taxes were withheld from your paycheck and the money was taken from you automatically. Because they figured out that the only way they could run the government was to have the cash flow coming in from taxes. And they could not plan on expecting Americans to budget because they knew Americans wouldn't. So they started pulling all the money out of our paychecks. Same thing with Social Security. It's pulled right out of your paycheck. Well, that's what people need to do if they want to save money. They need to pull the money out of their paycheck before they can touch it, see it, or spend it. And so I recommend that couples pay themselves first, agree on a pay yourself first number, and the first place they pay themselves first into is a retirement account, specifically a deductible retirement account. Here in the U.S., that's a deductible 401k plan or a deductible IRA account. And the reason is that you want a deductible account is because that way you're not paying taxes. The money's coming right off the top, being automatically put into a tax-deferred savings account, no tax up front, grows tax-free until you take it out. You can start taking it out at 59.5. And that's how people build real wealth. And I'll tell you, it's interesting because there was a survey that just came out that I've been talking a lot about. Fidelity Investments, one of the largest providers of 401k plans, came out with a survey of the 72,000 millionaires that are in their plans. It's 72,000 people basically who paid themselves first and become millionaires. And the number has doubled, by the way, since 2008. And in the survey, they looked at, well, what do these people do? Because I think this is really valuable information. What do these millionaires do that's different than what other people did? Well, first of all, they saved 16% of their income. So if you want to know what the pay yourself formula is, it's at least an hour a day of your income. And these guys saved 16% of their income, which is 4 times what the average American saves. Second thing is they started saving early. They saved for an average of 30 years. They had 75% of their money in equities, so they were tilted towards growth. And they hit the $1 million 401k number at 60 or older. So, those are really good lessons from a pay yourself first plan as to how do you get there. You follow that recipe.
And I think there's a big saving crisis in this country because if you look at the stat, 76% of Americans are living paycheck to paycheck. So there's a lot of people out there that are not saving their money for a rainy day, either for emergency, for a vacation, or for a home, and they're living paycheck to paycheck. That's a scary number to see.
It is a very scary number. It's repeated all the time. The number's accurate because we do research on it. Because I think it's also pretty interesting how well Americans are doing. First of all, there are 10 million millionaires now in America. It's a record number. There's 24 trillion in retirement accounts. When you look at the 52 million Americans who have retirement accounts, and you look at people aged 55 or older, 23% of those people have over $250,000 in savings. So 1 in 4 Americans over the age of 55 are doing fantastic. Now, if you also look at Americans over 55, about another roughly, I believe it's 20%, have less than $1,000 in savings. So we definitely are living in a have and have not world. And there are a lot of people who, unfortunately, because they're paid so low, they just can't, they find it hard to save money. But there are a lot of people who are doing very well, meaning that they're making good money and they're saving well. And then there are a lot of people who are making money and unfortunately they're spending every penny that they make. So part of that comes down to also changing your habits and changing your behavior.
And I think also if you can consider inflation in the current economy, it gets harder and harder to save your money. If you look at the grocery bill, it continues to go up every year. If you look at the education, the cost to go to school and college, it's 50 times what it was for baby boomers when they went to college. A lot of them could work a part-time job and pay off their tuition. Nowadays, you can't even do that anymore. So a lot of them, when they leave college and they go to work, they have a mounting student loan bill, and then they have to pay that off, and it makes it harder and harder to save money.
Well, I think,
what are your thoughts on that?
I think you're right. I think there's 2 issues really affecting the average American now in the last 20 years. It's healthcare costs and it's education costs, and they're both unfortunately things that you almost can't get away from. Healthcare costs. It's expected that your healthcare costs are going to be at retirement at least $225,000 in healthcare costs. Healthcare is the single biggest financial burden American families face today. We have to solve the healthcare crisis in this country. It is seriously insane what it costs to get medicine and go to the doctor, even with insurance. The healthcare companies are all getting rich, and it's absolutely on the backbone of the average American. It's just unacceptable. That's number one. Number two, education costs are absolutely, positively, 100% out of control. I went to USC. Today, the cost to go to USC for a year is 6 times what it was when I went to USC.
Wow.
And it's 10 times what it was when I went there as a freshman. So, today, the cost to go to a college is between, in the United States is, again, somewhere between $30,000 to $70,000 a year. You have American families that have to save $250,000 to put their kid through college. I have an 11-year-old and a 5-year-old. By the time my 5-year-old goes to college at the rate it is now, it could be $1 million for him to go to college. It's just insane. And you ask yourself, how does that happen? And, we'll get a little political here, but part of how it happens is the government's in the lending business for education. If the government got out of backing all these student loans, then then people wouldn't be able to get the loans. Then the schools couldn't continue to raise their costs, and then they wouldn't be able to continue to build these monstrosities in schools that they're using all the money for. So the good news is I think this will change, because I think a lot of people will start getting their educations online, and the cost of education is ultimately going to turn and come back down again. But it's a huge problem. And, what it really means is that Americans have to work harder than before. You have families working, 2-income families that are barely getting by. And we just, have to do something about these problems. But the only thing is, these are universal problems that realistically most people can't fix. I don't think I can fix it. I don't think you can fix it. All we can focus on is our own economy. And what I teach couples is, don't worry about what's going on out there. Worry about what's going on in there. Meaning that as a couple, or if you're single, focus on your own economy. Focus on growing your income. Focus on being indispensable at work. Focus on things you can do to save more money. Focus on your financial education, because the only thing you're in control of is your own financial destiny, and that's what matters.
Now, you interact with couples, and in your experience, you probably look at their retirement account, their savings account, but let's focus on their retirement account. What are the biggest mistakes you see couples making with their retirement account?
Well, so interesting that besides not saving enough, the biggest mistake I see couples making is they're too conservative. So a lot of people have well over 50% of their money in low-yield investments, money markets, CDs, treasury bills, and those investments are paying less than 1%. And I just shared a new statistic again at the speech the other night that $1.7 trillion is still sitting in CDs that are paying less than 0.5%. So we see people too conservative. Second thing we see couples do, which is a huge mistake, is they have multiple IRA accounts and they leave their money in old 401k plans. So we see couples will come into our office and they have 4, 5, 6, 7 IRA accounts, and they've left multiple 401k accounts behind when they've left their company. I strongly recommend that couples, when they leave a job, they do what's called an IRA rollover. They roll the money from their 401k trustee to their IRA directly, and that they manage the money in an IRA account, because there's a lot of benefits to doing that. The fees may be lower. You can diversify the portfolio greater. You are not dependent on company stock. If you have company stock, you have more beneficiary options, and you can have a financial advisor, if you want, help you. So that's really important. Another mistake we see couples make is they try to time the market. So they're trying to guess when to buy, when to sell. They don't have a diversified portfolio. They're in the market, out of the market. Really, one of the things I really recommend is that couples hire a financial advisor. And I don't just say that because I work at Edelman Financial Services. For the last 15 years, have not worked at a firm since I retired from Morgan Stanley. And all my books, I tell people, if you've got money, go hire a financial advisor. Get a financial plan done. Hire a fee-based financial advisor so that you're not trying to do brain surgery yourself when you're not qualified to do it. Once you have over $100,000 in investable assets, it's really time to start getting serious about how you manage your money. And that's what we see smart couples do. The truth of the matter is, we see couples, they tend to hire us and hire financial advisors once they've got $100,000 in investable assets. Our firm takes accounts with as little as $5,000, and we do our first appointment for free. So if somebody wants to come to our firm, they can go to edelmanfinancial.com. That's edelmanfinancial.com, and they can ask for a free appointment. They can come in and meet with an advisor, and that advisor will sit down with them for up to 2 hours, run their numbers, go through their financial goals, answer any of their questions, see if there are ways to reduce their risk, lower their cost, improve their returns. And all of that's at no cost and no obligation. So that's something that people should consider doing.
And on top of the saving crisis that we have, I think that goes in sync in the lack of retirement savings as well. Because I think there's a retirement crisis coming to this country, because there's a lot of people that don't have enough money saved up to retire. And it's either because they don't put enough money in their savings account or their retirement account, or they're living paycheck to paycheck, or they just don't have a job, and because the economy is doing so bad. So this is very important to know. Thank you.
Yeah, well, you're welcome. Also, and I don't really know that I agree that the economy is doing so bad. Unemployment's at a 15-year low. stock market's on the best bull run we've seen in our lifetime. I'm 48 years old. I've been investing since I was a kid. This is the best market we've ever lived through. The market's up 172% from the low in 2009. The average person who's using a retirement account has seen their retirement account last 5 years increase by well over 50%. We've had double-digit returns 3 years in a row. Actually, not even just double-digit. Like the market's been up over an average of over 15%. So, if you're an investor, if you're saving money, you've done real well. If you've been able to hold on to your real estate, most markets where the real estate went down, it's significantly come back. So, again, it's about being in the game. In 2009, I wrote a book called Start Over, Finish Rich, and I went around the country touring America, telling Americans recessions create millionaires. And people thought I was crazy. I'm like, this is when you build wealth. The biggest time to become wealthy is when everything's on sale. And those people who listened and followed my plan and stayed the course have done really, really well. I want to give a couple other resources to you. People can go to my website, finishrich.com. I'm not sure when this is going to air, but we do seminars all over the country. One of our websites, smartcoupleslive.com, has the couples seminars around the country that people can attend. And, probably if you're going to go read one of my books besides Smart Couples Finish Rich, check out The Automatic Millionaire, because that's a really easy book to read. You can read it in less than an hour. You can put the plan in place in less than an hour. And that's probably, as you mentioned in the beginning of the intro, my most popular book. And if you go to the library, I'm sure you can find it for free if you don't have the money to buy the book. So I hope that helps people.
All right, David. Well, thank you for coming on for Wall Street from Main Street podcast. Once again, could you give out your website again?
Yeah, it's finishrich.com. And, Facebook, too. I'm on Facebook if people want to Facebook me. But finishrich.com and author David Bach on Twitter.
Okay, great. Well, David, thank you for joining us.
No, my pleasure. Have a great day. Thanks for having me on.